Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Welcome to Wednesday's edition of Benzinga's PreMarket Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick in the hard-working Benzinga Pro news desk, cranking out earnings and up-to-date news for you. Spencer is out of town on some business, so we will not be able to make fun of him today. Let's look at the S&P 500 index futures trading down a stick here. High 2104.50. That is just below the close. So big number on the upside. We dipped down to 2094.50. That is above the low from Tuesday at 2091. Crude taking another hit here, now down under the $46 level. Not loving the inventory numbers from last night. Another leg down here in the crude market. Lauren, if you're listening, I still hope you're short and you're holding out for $45. Going into the gold and silver market, the rally continues. We have gold trading up $10, trying to break through that magic $1,300 level. And silver well into the 18 handle, maybe heading for $19. Dennis, so far so good on your end.
So far, so good on mine. I haven't done anything yet or said anything yet, Joel.
Well, I mean, I got the show running. I had no.
That's on your end. You're doing good here this morning. I'm impressed with you. No gremlins, no Spencer, and no gremlins.
Maybe there's a correlation there. All right, Dennis.
Poor Spencer. We can't pick on him. He's away. We can't pick on Spencer.
All right, two things before we go into all the news here. Number one is I have to mention a lunch bet that I didn't lose, okay? And someone proposed to me. That someone is the Brentster, Brent Slava. And when the S&Ps were trading at 2180, Dennis, 2180.
Yeah.
He offered me 22. I had to take 2200, and he was going to take 2100. All right. Wow. And I said,
he was going to give you that much of an edge?
He was going to give me that much of an edge.
Oh, I would have been all over that.
Oh, I lifted the offer. And then he kind of balked on me. And we never made the bet. And he gave up that kind of edge.
I thought you lifted the offer. You lifted the offer.
I lifted the offer, but he kind of he pulled his hands back, and he said,
it was a
no
high
trade.
Frequency offer.
Yes, it was a high
frequency. Pulled the offer right as you were trying to lift it.
Yes, exactly. And so, man, I don't know if it was a steak dinner or a lunch or whatever, but a great long-term call by the Brentster here. We hit 2191. Dennis, I just want to talk about the S&Ps here for one more second. Bad day yesterday. I mean, any way you look at it here, I don't know if it was, and this is my term, you can't use it, panic Trump selling. Like everyone's so worried Trump's going to get in here, they're just going to dump it because there has been selling going on all week. But, man, oh, man, that trading range that's been holding since June, we snuck in the bottom of that trading range. Now we're back above it. But to me, some big technical damage in the market yesterday.
Well, a lot of uncertainty, obviously, as Trump has picked up some recent steam here in the polls. There's been a couple of polls that have him ahead. So this is no longer, a cakewalk here for Hillary. This is going to be a lot closer than I think a lot of people thought. And obviously, we're going to get the results here just coming up in just over a week's time here. So it's sneaking up on us pretty fast here. But the market is concerned. I mean, there's a lot of uncertainty with Trump. They kind of know what they were getting with Hillary. So I do believe this market wants to see Hillary win. And that's not the case. The one thing is, when you look at yesterday, some of the biotechs actually were starting to turn it around here yesterday. And if you look, the IBB actually closed in the green. And that was the one, sector that we've talked about that probably would prefer Trump over Hillary. And we're starting to see some strength there in some of the biotechs just yesterday there. And then what's interesting, too, is, you look at the earnings reports here, and we've talked about expectations all along. And it seems like, when the stocks are really beat up heading into the report, they don't have to do very much for the stocks to rally. And the best example of this might be from last night with Gilead. Gilead reported earnings of $2 $3.75 versus estimates of $2.86. So that is a flat out miss. They did beat on the revenue at 7.5 billion versus 7.45 billion. The guidance was okay here too, but Gilead really got hit hard on the initial miss and went all the way down to $71, but then they came in with their buying shoes on, and actually for much of the pre-market session here, it has been trading higher. It's just went into the red just slightly here now at 73.75, but significantly off those pre-market lows. And just even like Turbine's pointing out here in the chat, the PE is getting down here. Well, he says it's 4 now. I didn't look it up. It was 6 last time I looked at it, but the stock has kept leaking. This is one that I do have in my investment portfolio, but at a certain point in time, value investors, you think, just got to start looking at the sector because the sector is cheap.
All right, let's just go straight into the Gilead numbers. Dennis did mention that spike down to 71 even. Trading near unchanged here. We're just down a little bit. So on days like this, I like to keep an eye on the closing price, which was 74.07. And just keep eye 74.50. Last 3 highs right in that area. So there's your resistance. Nice gap to fill above that if you could get in a 75 handle. And the real low of the move, besides that pre-market spike to $71, stands at 72.21.
And sticking in the drug sector here as well, Allergan reported earnings here this morning too, and this is a miss as well. But again, look at what AGN did heading into the report. The last 5 days, 6 days, it was 232 just last week, and now we're looking at a 208 heading into the report. So they slammed the stock into the report. They came in, they missed on the bottom and the top line, $3.32 versus $3.58, 3.62 billion versus 3.69 billion. They cut their fiscal 16 outlook as well, so saying nothing good. Yet the stock is trading higher, and I've had a couple traders come and just ask me, why is Allergan up on this report? It's all about expectations, and you on the pre-market show were saying maybe we got to come up with a new acronym here for trading earnings off of expectations, because when the expectations are so in the doghouse, the stock doesn't have to do hardly anything for it to go higher. And here you are, AGN actually trading green here. Did they hit it off the bat, Joel, on these numbers? Because the numbers were pretty ugly. What's the pre-market look like in this?
Of course they did. Of course.
Oh, and you know what? I have written on my sheet, and I wish I would have been, I don't know, wasn't. What time was the earnings report at?
It was early.
6:30.
Yeah,
that's why. And I didn't get to my desk till 7. So, the sleepy bird doesn't get the worm here this morning, because I have written right on my sheet here this morning, and with the big star, it says buy AGN pullback if it pulls back on earnings. Starred. That's the biggest thing. I wrote that last night for myself. And that would have worked out well, because how low did AGN get here in the pre-market?
You would have had to been quick, Dennis. 201.70.
Oh, it's 201, the big hole number 2.
Yeah. I mean,
the ducks were all in a row.
You would have had to have a bid out there, because if you blinked, it was back at 211. And now we're just hanging out at the $210 area. Once again, important to keep an eye on yesterday's range. The high was 1189. The close 865. So we'll see what happens. Pretty volatile stock, so you're going to get a lot of action. Actually, 2 closes between 865 and 894. Let's call 208.75 good number today in AGN.
Yeah, report was ugly, but again, all about expectations. Expectations so low that the stock can actually go higher, and the sector is just cheap. And when you start seeing stocks rally on bad earnings, it's telling you that, the sector is getting a little bit too cheap too here. And I think I'm going to keep combing around and looking in some more of these biotechs there, because there are some deals to be had here, especially if Trump gets in, but I don't think that's going to be the case. I still think Hillary is going to win, but it's going to be a lot closer than we thought. In the chat, they're buzzing about Alibaba here too. Alibaba is popping here this morning. This is one I don't know. It's been the play to fade these earnings reports, and I'll tell you, that 105 level is absolutely huge, and that's where the stock is kind of hanging out here this morning, just in the pre-market trading at 104.99. Let me quickly just go get you the numbers here on Alibaba, and Joel will break down the technicals for you as well. So going to the trusty Benzinga Pro here, Alibaba did report here at 6:58 this morning, 79 cents versus 69 cents, and 5.14 billion versus 5.03 billion. That's a beat on the top. That's a beat on the bottom. Their mobile MAUs grew 450 million, which is up 23 million. So everything looking pretty good on this report. Again, though, you had accounting concerns. It was knocking it down here yesterday. Now you get the pop. Anybody who was underwater from the last week is probably looking at this as saying, oh, thank goodness I'm getting my money back here. Overhead supply, the name of the game here. I see lots of overhead supply from 105 up. I think the stock runs into resistance at 105, and I wouldn't be surprised if some of these gains start leaking.
All right, the market really has a short memory, Dennis.
Does.
Yesterday,
Dougie Cass always says that the market has no memory from day to day. And you know what? I think he's right sometimes.
yeah, he is every once in a while. So are we, right? But a couple things. Dennis, no way we're going to get a wager off on this one. I'm echoing your sentiments exactly. And then also, you have another big factor that's going to be weighing in at that 105 level. And Dennis, don't say anything, but let's see if the chat can pick up on why I think there's added significance to the 105, 106 area in Alibaba. I expect some answers here pretty quickly, but I'll give a hint. The high of the move recently was 110 even, actually 109.87. We had a breakdown to $99. So what do you have? You have an 11-point move. Chat must be sleeping this morning. So 50% retracement.
I'm sleepy too.
Yeah, this the 50% retracement puts it right back at the 104.5, 105 area. A lot of significance to me. I mean, if this thing closes above 105 today, all right, then hey, this is a good report. We're going back up to 110. But big area of control here in Alibaba. Implications for Yahoo, Dennis.
I want to short it. I want to short it here. And for some reason, I'm just not pulling the trigger. And it's probably that rule that it says never do a live radio show and trade stocks. I always lose money when I trade live on the radio here because you can't concentrate on the position as much when you're trying to concentrate on what you're saying. But that one on 105 level, I love it, even from the short sides here. So I think there's an opportunity here to be had. Also looking here, just, Yahoo is obviously up in sympathy here. We know Yahoo is pretty much an Alibaba tracking stock here now, getting the lift up to 42.40 here. That's where a lot of resistance was before. Its resistance was a little bit higher, 42.60, 42.80. It's only trading up 2.5%. Alibaba's up 3.5%. Sometimes that spread will close there as well. So even for you pair traders out there, there may be, a little bit of an opportunity there from a risk arbitrage perspective. But 105 looks big in Alibaba.
All right, let's get one more report here before we get our first guest of the day, Rogi Horner. She's a Forex and currency trading expert for Simpler Forex.
Yeah, let's jump just to this morning's earnings here too, and let's talk Time Warner because this one's interesting because obviously there is a deal on the table here. I want to go full disclosure. I did short some Time Warner here this morning on this report just for a day trade because there's a deal on the table here. So let's give you the numbers here. TWX. So TWX reported earnings here, and they blew them away. This is a really good report. $1.83 versus $1.37, $7.2 billion versus $7 billion. They raised their fiscal year 2016 outlook. Stock is trading up only $1.25. If you're disappointed in that, I think the reason, obviously, is there was already a deal on the table for this. So really, when you think about it, AT&T and Time Warner just trade together here, and is a good earnings report. Any reason that this, the deal's going to go through more because that's what it's trading off of more than anything now. It's not going to trade as much on its individual fundamentals if the deal actually goes through. Now, if the deal falls apart, the good fundamental report does help it. So I guess there's a little bit of a trade-off, and maybe Time Warner gets a little bit of strength. But if there wasn't no deal on the table, I think Time Warner would be a lot higher here today. But because the deal is on the table, I mean, it's not going to trade on its own fundamentals when there's a deal on the table.
All right, it is now 8:14. We are going to take a quick break. Bear with me as I try and dial up our first guest. That's Rogi Horner, Forex and currency trading expert for Simpler Forex. We'll be right back.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, and we have Rogi Horner on the line. She is a currency trader, Forex and currency trader for Simpler Forex. Rogi, you're not feeling too well this morning, but you still came on the show. We really appreciate it.
Hi, thanks. Other than my sounding lousy, I love always hanging out with you guys, so let's do it.
All right. Well, let's just talk about the quiet month that we've had here so far. Kind of just the opposite here. A lot of different factors going on. Probably nothing more important than the election. We have the ADP figures that are coming out. We have unemployment. We also have the Fed speaking today. Out of all those factors, what are you putting the most significance on?
Well, I'm putting the most significance right now in soybeans. I'm only being slightly facetious. So we had that GDP number that came out just going back just a couple days back. And, digging into that GDP number, it was interesting how much the Brazilian and Argentinian kind of vacuum left soybean farmers in the U.S. with a really great opportunity to up exports. And when you looked at that GDP number, just how much soybeans were built into it was a very interesting narrative that kind of ran through, just kind of the trading news cycle a few days back. And I bring it up because it's insane what we're seeing right now. And to me, soybeans and GDP was like, okay, we've fallen down the rabbit hole, and this is what it feels like to be Alice. But you're absolutely right. With ADP numbers out right now, I don't know how much this market's going to want to step out in front of today's statement on the Fed where we're going to be looking for certain words to get dropped. How imminent is this rate hike? I think it's been December. It's been a December narrative all along. Fed fund futures have been saying so. November, Fed fund futures never really baked into the cake any kind of move. So, yeah, how adamant are they going to be to prepare us for that rate hike in December? And are the equities markets going to throw a tantrum in the wake of that?
Just looking at the soybeans chart here, the futures bumping up here against 9.95. Looks like you have a quad top there. You just based on that report, I mean, you think that where's the next move? Possible breakout here, or we hit some resistance?
It's interesting. I love being a currency trader in that. I brought up the soybeans just because people are going to say, "What is this currency trader talking about? Soybeans and GDP?" But I think that the lay of the land, when you sit looking at the stock of every country, currencies, it's a very interesting one. And yeah, beans themselves, what's interesting is Brazil has probably got 25% of their crop in the ground right now. They dealt with La Nina. They're actually expecting a record crop in 2017. So I don't think this bodes very well for soybean bulls. And I wouldn't be surprised if we're going to be crossing back down through that 200 period simple around 980 in short order. So I think the move is probably done, and I'd be really cautious, or I'd wait for the market to get down to a level that 955. That would make sense to kind of build a good off a good base, build a long position again. But I think that was a one-off. I don't think we're going to see that kind of run again near term.
Rogi, let's go back to the Fed here, and you're a currency trader, and obviously there's going to be some big movement in the U.S. dollar here. I mean, if the Fed, looks like they're going to raise rates sooner than later, that might show some strength there. Obviously, people trace, yield there, so you get a stronger currency usually when interest rates are going higher, usually a weaker currency when interest rates start going down. How do you prepare yourself, ahead of this Fed decision here? Like, do you position yourself neutral? Do you take opinions on it? Do you look at sentiment? How do you position yourself ahead of it? And then, how do you actually trade the event?
It's interesting in that you look at the dollar right now, and we're looking at the third session where we're seeing a pretty strong move to the downside. And I think this is going to bode well for those traders that are thinking, gosh, I'd really like to be long dollars. It is, the currency of the most hawkish central bank minus, say, Mexico right now, which we got to talk about the peso before I leave you guys in terms of the elections. But the dollar right now moving lower, I think, is walking right to the front doorstep of traders like myself who would, generally speaking, like to be long dollars. But the reality is we were knocking on the door of 99 on the dollar index before this FOMC. And yeah, the dollar story probably got way out ahead of itself. But we also have to think about maybe why that happened, apart from the FOMC, because after today's statement, we probably are all going to be relegated to waiting for December 14 and the actual hike. And we have to remember that the yen weakness that we've seen over the past week or so, the continued pound kind of churning, if you will, even the euro, anytime traders are willing to, buy euro, buy pound, that means it's a dollar sell. On the flip side of that, if you're talking about a weak euro or a weak pound, that's a dollar buy. So sometimes a dollar really isn't the captain of its own ship. I think today, obviously, we'll look at it that way. But I still feel if we can get a nice move to the downside, it still makes sense to buy the dollar. And it does make sense that the dollar's coming off the highs, considering just for how long we've been waiting for this hike, and it just continues to get baked into the cake. And Janet Yellen's pretty smart. She's pretty much set this glacial pace for rate hikes. I think the voting members next year, it's going to be a different complexion. This is one of the most dovish FOMCs we've had in terms of voting members. So when we get our fresh blood in next for new voters in next year, maybe we'll see 2 hikes, maybe. And the market isn't seeing it that way yet, looking at the dollar weakness that I'm seeing.
Raggy, a couple questions coming from the chat here. First, Don33 wants to know, what do you use mostly to track the dollar? Because obviously trading against all the other currencies there, which is your preferred, symbol to trade the dollar, or at least to track it with? And then our UK trader wants your thoughts on the pound, FLAK UK from the chat. He's trading from the UK, so he wants to know what you think about the pound.
Awesome. Okay, 2 great questions. So the dollar, most people will look at the dollar index. If you want to trade dollar index futures, something that I will be looking at today, we'll be buying calls in the dollar index as this thing's melting down, preferably around that 97 area, 97.20, 97. So DX, and the current contract would be the DEES contract. So DXZ would be the futures. But this is what I tell all my futures trading friends. The number one way the planet expresses an opinion about the U.S. dollar is against the euro. So euro US to me would be the place to look for what it is, what the opinion is about the U.S. dollar. As far as the pound goes, that's a great follow-up, because the pound would be considered the second or third most popular way people express an opinion about the greenback. And as far as the pound goes, and you mentioned it's a trader in the UK, so I certainly don't have to tell you, my friend, that with Theresa May basically now wrangling with Parliament, and you have this now sentiment of she sent this message to the markets and to the globe. We are going to trigger, Article 50 in March of next year, and then the Brexit really at that point has officially then begun. But what's interesting is how much of this is going to be micromanaged by Parliament, because in the UK, the Parliament is still, I would say, dominated by the Remainers, the people who wanted to stay. So here we have this Brexit process going and possibly being micromanaged by kind of the other side of the vote, if you will, when that UK referendum from June was decided upon. So does the pound have a long, steep climb ahead of it if it's going to break the downtrend? It does, my friend. I'm still a bear on the FTSE. I'm still a bear on Euro stocks, and I'm still a bear on the pound. But let's also be strategic about it. If I'm going to sell pound, let's focus on the best contrast we can find, which means let's sell pound against a stronger cast of characters. I think post-FOMC, post-election, and maybe even post-Reserve Bank of New Zealand, we could see pound shorts against the U.S. dollar, Australian dollar, and New Zealand dollar. I'd be cautious against the yen. I think the euro's got a steep climb ahead of it, so I'd be cautious against the euro. And until OPEC figures out what they want to do, be really cautious about committing long-term to long Canadian dollar. So
you kind of went into my last 2. You went into 2 questions there, and I was going to ask you: are you looking at the chat or something? Is the dollar also?
We're just simpatico, my friend. We're just simpatico.
Flack UK, is the dollar action holding oil prices up? Could we see the oil drop really increase if the news is not great?
Oh, gosh. So oil, OPEC is probably one of the most effective central banks out there right now. If you want to look at OPEC as a central bank and crude as their currency, no one's done a better job bamboozling and jawboning their currency wherever they need it to be than them. Here we are, record output levels in OPEC and non-OPEC countries, and everyone else is trying to catch up to record levels. You talk about Iran, you talk about Iraq, you talk about Russia. You have a non-OPEC country like Russia who says, well, we'll think about cutting or freezing when OPEC figures out what they want to do. You have Saudi Arabia now, just last week or week before, they released their bonds. So they're having to play a lot of they're raising money left and right because these current prices are killing them. And yet they're trying to convince the planet that this cut or freeze will mean something without increased demand. So I think crude oil right now is being propped up by possibly the fear that this cartel gets their act together. Now, when I say propped up, it's had a rough end of October. So I think we're flirting with about $46 a barrel right now.
Correct.
And I do believe we've crossed through the 200 period simple. So at some point, my feeling was, are we going to not see through the fact that these freezes or cuts are coming from record output levels? So essentially, they're meaningless. Has the market finally, glommed onto that? I think so. But that doesn't mean that every bit of good news about Russia and the Saudis cooperating, or maybe one more exemption for Iraq, or some sort of realistic, narrative to a November 30th freeze or cut wouldn't pop crude one more time. I just don't think we go over 52. And you know what? I don't think OPEC wants it over 52 either, because here come the shale producers, right? So they've got a very tricky tightrope to walk, but I'm not looking at a connection between crude and the dollar that strongly right now. I think it really is the OPEC narrative.
We've been on the line with Raggi Horner. She's a foreign currency trader expert for Simpler Forex. Raggi, feel a little bit better. I tell you, you did one heck of a job under the weather. I can't wait to get you back on when you're 100%. Great comments. We'll talk to you again soon.
Sounds great. Thanks for having me.
Thanks, Raggi.
Unbelievable, Dennis. That answer to OPEC, and I tell you, I try not to let different factors affect positions when I'm looking at technical setups. But man, oh man, it was hard to hold a crude short through the USOs. I did it for quite a while, did okay on it, but really missed the move once it lost that psychological $50 level.
Yeah, and it's difficult here with crude to figure out. It's really just been in a trading range when you really break it down. And do you have the chart? What do you want to look? You want to look at the USO, or do you have? Let's look at the crude futures, because sometimes the USO can be deceiving because it obviously there's a little bit of deterioration there in the price. But bring up the chart here, and I don't look at the crude a lot. I'm an equities trader more than a crude trader there. But every once in a while, obviously it's a good idea to take a look at crude because it affects so many other things here. And we've been in a trading range. Every time we get upwards to 50, 51, we keep finding resistance up there. We get in the mid 40s, we keep finding support. So, until we break out, either break out up to the upper end of this range or break down, it's difficult, really. I guess you just keep trading the range.
All right, Flack Flack UK pointing out here, Alibaba coming down just a little bit. Nothing to get real excited.
Where's that at? I wanted to short that thing 105. Oh, I'd be 80 cents on the money here already. Yeah, I got to just. I got to start doing the trading and the radio show at the same time. I got to break that rule.
You know what? Maybe have Spencer on the keyboard and have him, the other Spencer.
Ding, 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 ding.
Yeah, have him putting in orders for you. Boom.
2 minutes before we go to Tommy.
Yelp.
Where do you want to go?
Yelp.
We had some questions about Yelp earnings here. I'm going to go to the trusty Benzinga Pro, grab you the Yelp numbers here because Spencer is off here today. And I didn't get the numbers ahead of time. So I'm going to the Pro here right now. Yelp reported 22 cents versus supposed to lose 3 cents. That's a big beat there for them. 186 million versus 183 million. They are looking at Q4 revenues of around 195 to 195 million. Estimates were at a 192.7, so right in there. The full year, they're looking a little bit higher than estimates. So estimates for the full year, we're looking at about 707 million they're looking now at 709 to 713. So raising the guidance up just a little bit there. And the Yelpster, don't call it a comeback here, but that is trading up 10% here this morning. Again, it's all about, I'm going to say it again, about expectations coming into the report. When you see the stock down 10, 15, 20% in the 3 weeks prior to the report, you know they don't have to blow it away. And they actually had a pretty good report here. So not surprising that Yelp is getting a pretty good lift on these decent numbers.
Is that what Apple makes in a day? 192 million?
No problem. Oh, I think it's making a lot more than that, probably.
Well, first of all, looking at the daily chart here, and I don't look at this one very often, but if we would have talked about it yesterday, you would have saw the big sell-off in earnings, and had a nice gap fill, and that was probably from the last earnings report. So your real technical traders may have caught that one long, or at least covered a short in that area. Looking at the pre-market trading, to me, it's all about staying above $36 here. You had a high at 36 and a Q on October 19th. Pre-market high right in that area. Holds 36. Yeah, we can go to the double top at 37, but actually that double top is closer to the 37.30 level. So take a look at that real quick. KOL ETF has been strong from downward dog. Dennis, do you trade the KOL at all?
What are you looking at? Which one? KOL?
Yeah, the Vanek.
Coal. I don't.
Coal.
No,
Coal.
I don't trade coal, and so I don't really know anything, from a fundamental perspective about this. Obviously, we can do a technical on anything here,
Straight
but
up.
I mean, coal. You just think about it, even before you look at a chart. Sometimes it's just good to think about, and coal is just, that it seems, doesn't coal seem like, and I know this has been straight up here, so maybe it's a bad thing to say, but doesn't it seem like it's, the fuel of the past? Like, are we still, is coal really going to be the future driver here? That's what the first thing I think about. And then, you look at a longer term chart, and obviously 2011, this was up to $50, and, now it's down here at 13. I mean, it's been a heck of a run for the last few months. It's come back a long ways from the lows, but, do you really, look at coal as like, I want to invest in coal? I don't. Just my own personal opinion. I think, the world's going in a different direction here, especially with global warming. And I know, some people say there's no such thing as global warming, or, or Trump was even saying, that it was something made up, he had tweeted years ago. But, let's stop and think about it. We're in November here, and we had a 75-degree day in Detroit yesterday. So, this summer was hot, hot, hot. And I think, from record temperatures here to record temperatures all around the world I'm hearing about, I think global warming is an issue that we're going to have to tackle here eventually. And coal does not help with that problem. That's why, you look at coal and you think, well, if it's, if it's causing, major problems here, bigger problems, then they're looking at different things. And longer term here, I don't think that bodes well for coal.
All right, I guess I would say just draw a real nice straight trend line here, and this is off the weeklies, and just kind of play it that way. $14. I mean, this looks like the next whole number. Looks like you had a lot of weekly highs at the $14 area. That was back in April and May. All right, second break of the day. Our Wednesday guest is Tommy Lackey, managing partner and portfolio manager at Relativity Capital Advisors. We'll make a quick break here and be back with Tommy. Welcome back, traders and investors. Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm your co-host, Joel Alconin, along with Dennis Dick, and we have Tommy Lackey on the line. Tommy, how you doing today?
Doing terrific. How about you guys?
Good. Just trying to get into the show here without Trusty Spencer here. Comment on the market, please. So overall market, I think we had inflicted a lot of technical damage yesterday. Give us your take. What's the market need to do to get back stable?
Well, I think you're right, and I think we did do a good bit of damage, lost some levels yesterday. However, on the other end of it, I think that one of the things I do at this point is I start looking back, and we're now 6 days in a row down. That doesn't mean we can't keep going down, but I don't think this is the time I'd be jumping in and pressing a lot of new shorts. It's one of the areas to where obviously at these support levels these days we'll usually bounce around them a little bit before we make a final decision, and I think that's where we are right here.
And did we lose Dennis here?
No, I'm on here.
Okay.
So I'm trying to hunt down the Allergan news. I thought me and Joel miscommunicating behind the scenes here as well. I thought Joel was going to handle the first couple because I'm still trying to hunt down your Allergan news. Allergan has just fallen 10 points here. Just the conference call just started at 8:30, and obviously they said something on the call that spooked the stock here because it really started falling under $200. It has bounced back. We're back to $204 here, but I'm trying to hunt down the news, so Joel's going to handle the first couple and see what was said on that call.
Okay, going to the nitrous scan here right off the top. Wow, this is one we haven't talked about in a while. FCAU, the autos, some of them had some good earnings, but haven't been able to rally. What are you looking at in FCAU?
Yeah, FCAU went off a big run. And then on this, and as you can see with a lot of these, I put little pullback levels that we ought to look for. If you've got something that's been this strong in a weak market, that doesn't mean it's not going to come down some, but it is trying to tell you something. So with that particular scenario, I said that, after yesterday's candle, I might not be jumping on it here, but if it pulls back down in that 7 level and holds that might be a good area to try to work against.
All right, looking for some action in CR. What kind of technical setup you got there?
You said NCR?
No, CR. Crane.
CR, yeah. Crane, it's a similar scenario as well. Had a really big move up on earnings, doing real well, and it looks like it's flagging out here a little bit. The ideal, in my opinion, on this one would be for it to come back down to a little bit below 66, maybe 65, 75, or somewhere in that area, the previous breakout zone, and then hold that area. If not, if it doesn't want to come back down, if it breaks above, I would say 68.50, it's probably got some more room on the upside.
Also on the nitrous scan, EMN.
Yeah, this is one again. It also had some good numbers, performed pretty well, and then now it looks like it's coming back off that a little bit. Had a big shot up. Come on, my chart doesn't want to pull up. EMN had a real big and good-looking move higher, and then the last couple of days it's been kind of settling into that. And so now we just have to see how much it wants to hold this. Again, this is when I said that a good level to trade against would be potentially 70. If it can come back down and test that 70 level and hold. But right here at the 72 level, if it doesn't want to go back below it, because that was a small breakout as well, it might just move sideways here for a few days and set up for another leg higher.
Tommy, help me out here. Now, see, when I look at this chart, the first thing I look at is the gap after earnings, between 68 and 69, basically. I mean, to you, it's just you'll trade it, and long before it gets to that gap area, you'll cut out of the trade. Or, how do you approach gaps like this?
Well, in a scenario like this, if I was trading against that 70 level, then what I would do is I would come down to below the candle or below the tail of that gap up. So the low there was 69.34. So as close as if I could get it to a pullback to 70 that looks like it's holding, then 69.34 is your ultimate stop. And that's not a very far stop. That's one of those areas that when you're trying to play these pullback plays, you don't know whether it's going to close that gap or not. So it's not like you want to give it a ton of leeway if you're trying to play a scenario like that. Now, if you're waiting for a long-term play, then sure, you either wait for it to close that gap or you wait for it to move over probably yesterday's high at this point. Because that could give you a little confidence that it set itself back up.
Looking for a strong stock in a weak market. Andersons.com. What are you looking at this one? Is that the window company?
I do not know. I have no idea. No, I think it's, I want to say maybe food.
Yeah.
Or no, farm equipment. That's what it is. It's farm equipment. But you look at this one and it's breaking out in a weak market, and it's not like it was one big surge. It's been plodding along all month when nobody else has been working. And if you flip over to that weekly chart, that thing is beautiful from a base and reversal standpoint.
And one more, you like a nice orderly pullback and a reversal by ALKS. Let's take a look at that.
Yeah, again, it's one of the drug company areas, so they've been pretty beat up. No one's really wanted to be a part of them recently. And then yesterday it came right back down to support, went through it just a little bit of the previous breakout, and now it's trying to reverse. Now, again, you're in the middle of a big gap, so it's kind of like the other one. You got to play against these lows. You don't want to be holding it until that gap closes, but you play against those lows and it could potentially start working from here. Or as I mentioned to you guys before, this might be a good area for a straddle or a strangle to where you kind of look both ways. You put a play on both sides.
Tommy, your meltdown scanner here. A few stocks in here. This one might go in the opposite direction today. I'm going to jump to XPO here. We had Deutsche Bank coming out on the transports here just last night, and this was their top pick in the sector. So they're going a little bit opposite to what you may be seeing technically here. XPO is actually bid up here in the pre-market at 32.50. There's been no trades on it here this morning, but this was a Deutsche Bank top pick.
Yeah, it looks like it's ready to come into this gap. If it holds here and reverses, that does show a lot of internal strength and buying power, because you get that close to a gap and it holds, you got to respect that. But the way it closed yesterday and with the volume it's had the last few days, if they hadn't come out with that news, I'm not sure how it would handle. The other side of that I'd say is that oftentimes when we get news, you'll get a quick pop and then it'll fade. So just be conscious and make it prove itself here for a little bit this morning before you jump too quick.
Tommy, general question here. So obviously you're a technical trader here, but do you follow a lot of, individual fundamentals? Do you follow ratings changes, the earnings reports? Do you dive into that, or you just look at the charts and let the charts tell you the story?
Well, I have been a pure chart guy for years and years and years, but I just recently teamed up with a guy who is a very big fundamental guy. Now, he still does all that work. I don't do the work because I just don't get it as much as he does. But I am definitely warming up to the importance of making sure you know where those sit. Because even if you are trading it technically, the better the fundamentals are, the more confidence you can put behind it.
Another stock you got on the list here today, and actually a stock that has analyst action as well, Horizon HR Zebra N, which really got the beats there yesterday. It's a little bit more analyst action here today. I'm just going to and checking it out. Compass Point is coming in and cutting it to a sell, putting a $10.50 price target on it here this morning. But man, this one really got whipped already yesterday, so I'm not sure how much that analyst is going to have an influence here, because stock already got a beating.
Yeah, I was just being a little smart aleck this morning and said that basically Horizon finally found the cliff or the edge, whichever way you want to look at it. But the reality is it was terrible, and the volume was big. Again, I said I probably wouldn't chase it here because it's been down strong for 4 days in a row. But on the other end of it, it's 200-day moving averages at 1219. It's 150 moving averages at 1271, and that 1280 is probably the bigger breakdown level. So I'd watch those three levels on any kind of bounce if it has it. If it just keeps going down, then it can just run without me.
Also on your list here, LAD. What are you seeing in this one?
Yeah, this and some of the other auto dealers just aren't really doing so hot, even though, like you said, the auto numbers are coming out pretty good, but these dealers just aren't seeming to feel it. And this one yesterday broke a MA cluster with three major moving averages. The 100, 150, and 200 day were all clustered right in that same area, and that's where it bounced 3 days ago. But yesterday it just couldn't do it. And the volume was not real high, so we still want to kind of keep an eye here, but it's not looking good at the moment if it doesn't find somebody quick.
Cody, COTY. This is one I haven't looked at in a long time. What's this one doing?
Yeah, it kind of caught me off guard as well. And this is just a pure downtrend that tried to move sideways for a while, and then now it's heading back down. It just looks like it may be ready for another leg. If it loses that probably 2180 area, somewhere in that range, then it's got a pretty good fight. It can head down to the 20 area easy, probably closer to 19 in my opinion.
And then DGI, looking at a gap in this one.
Yeah, DGI just looks like it's heading down. It's got this gap right here. And so it's kind of like one of the others a minute ago is that basically if it gets on into that gap, it's probably going to close it. If you do see buyers come in and reverse something without closing a gap when they're this close, that means they're serious. But chances are you respect the gap close for now.
ENS.
I don't know much about the company, but the chart just kind of came out to me as well, is that it's just a clean downtrend that just keeps, moving sideways, popping down, moving sideways, popping down. And you're in a scenario now to where I would say you go down in the about $2 increments, 61 and about 59-ish, and then a little bit lower at about 56.50.
ADR Sony Corp, SNE. What are you seeing in this one?
Yeah, that move yesterday was pretty big and on volume, kind of breaking away from that little level. It was already below it. It tried to move sideways a couple of days, and a lot of times you think, okay, maybe it can head back above, but it didn't. It just gave up. And this is one of those where I said it closed the gap right there, and you didn't get really any bounce at all. So if it doesn't get some action here real quick, which it might this morning, and it might reverse it there, but if it doesn't, then I'd expect continuation down to probably, we got the 150 moving average at 29.88, and then your 200s all the way down at 28.
And you're looking at one more here, Asbury Automotive Group, which is ABG. It's trying to hang on to support here, hanging out near those lows, though. And always when they hang on those lows 4 or 5 days in a row, I get concerned that they could take them out. Do you have the similar concerns?
Yes. I mean, it's, after seeing Lab just a few minutes ago and not really in the greatest spot either, and it's one of those areas to where when you, like I said before, when you go to these support areas, a lot of times you'll dance around them a bit. And you kind of figure out who's trying to take control. And here, the buyers just don't seem to be able to hold on to a whole lot. So it's starting to turn into what looks like a bear flag to me. So if it loses it, I'd respect it. If it pops above the highs of this whole, then, you might get a little run up to close that gap, but it's just got a lot of proving to do.
We've been on the line with Tommy Lackey, managing partner and portfolio manager at Relatively Capital Advisors. Tommy, I guess when we speak to you next Wednesday, there could be maybe some change. Well, there's going to be a change in the White House. It just depends who it's going to be. So, Tommy?
Well, unfortunately,
Tommy.
I'm not going to be here next Wednesday. So I'm going to have to miss next Wednesday. So I hope you guys have a great week, and I'm sure you can find someone better than me to talk politics.
Bite your tongue. All right, Tommy, we'll let you go. We'll talk to you in 2 weeks.
All right, guys. You guys have a great week, and good luck.
I hope Tommy's not heading out of the country, based on the outcome of the election, Dennis.
They may not be able to let anybody else back in the country.
All
I
right.
All right, guys,
as a
not
Canadian,
my
I may
style.
not be able to cross the border again if Trump gets in.
Dennis, you got room for
Lock
me
those
over
borders
there.
down, build a wall around Canada, no more Canadians allowed in America.
You got an extra room for me there in the basement. I know. So.
you're planning on crossing over and living over here. Well, you're half Canadian anyways,
Oh,
Joel.
that's
So
right. I forgot. All
you got
right.
that Canadian blood in you.
So what else
All
are we
right.
going to cover here in the last 3-4 minutes?
So we got 3-4 minutes here. If there's any symbol, obviously there's 231 stocks that report here today. So we can't cover them all because we're just not that fast. But if you have a specific symbol you want to cover in the next 3 minutes, let us know here in the chat. I'm going to jump into a couple symbols that we haven't covered yet that were on my radar there. Herbalife, HLF, and Herbalife is actually trading down here in the pre-market. They did report earnings here last night. Just grabbing the numbers from the pro. HLF reported earnings of 1.4 or 1.1 billion. This was on the revenue, 1.1 billion versus 1.14 billion. Looking here, just from the last night's report there, I'm trying to grab it. $1.01 versus $1.09. That's the number I was looking for. So it was a miss on Q3, and HLF trading down a little bit here in the pre-market, making Bill Ackman happy for one day.
Wow, that 52 print was quick after hours, rebounded very quickly, hanging out at the $58 level. 59.12. That was your close from yesterday. 58.22. So not touching this until it can go green on the day. 59.12 was your close. Besides having that crazy print that you had, yesterday's low 58.22. Look out below that. I see nothing on the daily charts until 57.10, your August 26th low.
Yeah, Larry also informing us there in the chat that the CEO of Herbalife is planning to transition out there. So new CEO is going to be coming in, it looks like, in May. A couple traders are saying they want a preview of the Facebook earnings here tonight. FB is going to report here after the bell. Got beat up a little bit there yesterday. Is bouncing here today. Expectations, I will say, are very high for Facebook. But what I will also say is Facebook has a history of meeting or beating those higher expectations. So this is one that I would be cautious normally of if I looked at a chart like this heading into earnings. I don't know in Facebook's case. I'm definitely not shorting it ahead of the report because they have been so good at blowing numbers away and really exceeding Wall Street's even higher expectations that it's been very difficult in the last 2 or 3 years to bet against this company. But it was beat up a little bit yesterday ahead of the reports, bouncing a little bit today ahead of the report. So it all depends on the numbers. They need to blow it away. But they've done it in the past.
Yep, and that's what Phil Chen is saying. FB price for perfection. Just go.
Problem is they give perfection
They
sometimes.
do it every time. In fact, Dennis, here I'm going back. The stock IPO'd back in 2012. They have had one revenue miss, and that was of a penny. And that was back in Q1 in 2013. They've had one revenue miss, and that was back back in 2015, and that was very small. So if you're going with the trend is they're going to beat. If you're going with Dennis and I and Phil's expectations theory here in Facebook, a lot of high expectations for the issue.
Linda wanted to know about Netflix. Obviously, they reported a couple of weeks ago here, but we haven't talked about it. It had the gap and the go from the earnings, but just quietly here is starting to leak. Last 3 days here, got to the big hole number a couple times, the psychological 130, couldn't get through the 129 handle, so never actually got a test of 130. Now we've leaked, and yesterday we got down to $121, 123. We know long term I've had this one wrong because I've hated Netflix for a while here now, and the stock has continued to go higher. So I'm not even going to give you my opinion on this one because I haven't had this one right.
All right, this one here has had you had the follow through off the earnings, right? And I'll just go with one number only. Dennis likes that. We've had about a 12-point rally in that gap, make it 6. So I'll call 122.50. You did break below that level yesterday, but closed above it. That would be giving back half of those gains here from just post earnings. So keeping an eye on 122.50. All right, we were almost gremlin free here. I don't know what I did on the sound there, but anyways, we are going to wrap up today's show, and we're going to preview tomorrow's show, and we're going to have Michael Hewson on from CNC Capital Markets across the pond. Let us know how that Brexit transition is going. And also, we got a little Fed action going on today, but not expecting much out of the Fed here. Probably holding steady here until December. But Evan Schneidman of Prattle, who analyzes all the central bank data, I don't know if he's going to add OPEC to that based on Ragi's recommendation, but he'll be our other guest on tomorrow. Have a great trading day. Thanks. I hope you enjoyed the show. We'll have Spencer back tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.